Hello, everyone, and welcome to another episode of the Financial Advisors Want to Know podcast. I'm Catherine Tindall with Dominion. We are a CPA firm that serves advisors for their tax and income tax needs. And on today's episode, I have with me Tony Steuer. Tony and I actually recently did a podcast swap, so I'm showing up on Tony's podcast. We'll see if they actually release at similar times, but we had a really great conversation about taxes. And so I wanted to invite him to come on and talk about his specialty. So Tony, if you're not aware of who he is, he's an internationally recognized financial preparedness advocate. He's a podcaster, he's an award-winning author and fintech advisor, and he's an expert content reviewer for Nerdwallet and Bankrate. So thanks for coming on the show today, Tony.
Yeah, well, thanks for having me, Catherine. Excited to be here today.
Yeah, so we were going to do an episode talking all about life insurance and life insurance policies and your experience there. It's one of those things where I always ask it, and I work for advisors, and I ask it in my assessment of, hey, are your insurances up to date? Is your life insurance up to date, et cetera? Because a lot of times, even for advisors, they're like, yeah, I know I need to update this, and I need to make some changes. But I think for a lot of advisors, they want to include it in their process if they don't already. And so, if we just do a dive into what your experience has been there, why do you think advisors should be reviewing life insurance policies?
Well, I think one, it's part of if you're a CFP, it's one of the 6 pillars of being a CFP. So that's one of the reasons. But what I've seen with advisors oftentimes is that they cover the very basic need. They'll talk about how much life insurance coverage. They might even take a look at, what type of life insurance, but they don't really go beyond that. But the financial planners are really well situated to help their clients with how long the coverage should stay in force, whether they should have whole life insurance or not, and to really answer those questions that clients usually don't even know to ask.
Mm-hmm. Yeah, no, that's a good point. And so when advisors are going through that process, do you have a recommended, getting into that conversation initially and then some of the pieces of how they should go through the process of reviewing the policies?
Well, I think you always start off with the basics is instead of, when I consulted for advisors, the first question always was, well, is this policy any good? What should my client do? And it'd be like, well, let's back up a minute and talk about what is your client trying to accomplish?
Mm-hmm.
It's just like you do with your client in all other areas is you talk about your client's goals. And then once you've, clarified your client's goals for their insurance, not, does your client like whole life insurance or not? Do you as an advisor like whole life insurance or not? You determine where the client is trying to go, how long they want coverage for, and then work from there.
Yeah, and in terms of having that conversation with the client, it can be a really touchy topic. Do you have any recommendations around some of like the interpersonal dynamic that goes on with having the insurance conversation with them?
Well, that's a great question. So I would do it as part of a checklist
Mm-hmm.
is because life insurance, you're talking about death. And so that's where people's minds go first. But if you're treating it as just part of the client's risk protection profile,
Mm-hmm.
that's a great way to do it is saying, hey, pretty much every client will end up having some life insurance. So say, hey, as part of the planning process, we need to make sure you have the right amount of life insurance and the right type in order to make your financial plan work. And then you're framing it as part of the bigger conversation, which helps clients figure out where it fits in. Is life insurance sometimes has a mystique where people think it can do all these things, or otherwise, or sometimes, they'll think, well, this is really, I just don't want to talk about it. Life insurance makes me uncomfortable either because of the thought of death, or what's happened more often than not with financial planners, the ones who haven't started as life insurance agents, is they'll have a negative opinion
Mm-hmm.
of the life insurance market. And so they'll let that color their decision making. So instead, you just look at it as another financial product. It's a risk leverage tool.
Yeah, no, that's a good point. And I guess, could you describe like some of the, maybe nuances or things that you've seen advisors have misconceptions around life insurance if they don't have a lot of experience with it, or they're in that bucket, like you were saying, of the just really skeptical because there's definitely some bad actors out in the field, but it's just, for advisors, how should they be contextualizing things, from your opinion and things that you've seen, when they're trying to have, that fiduciary relationship, they advisors who position themselves as like, I'm not, I don't want any conflicts of interest, and, people who are more on that camp of things.
Well, I think the first thing that happens is that they assume because a life insurance policy is in force, that it's going to be a good policy and that it'll work well for the client and that it will continue to stay in force. And so they're not looking for red flags with a policy. Now, for example, on a term policy, is the premium may not be guaranteed for the full length of the term. Most level premium policies are guaranteed for the full term, but some are not. So that's one of the questions that an advisor can start with is, is this term policy, is the premium guaranteed for as long as the client expects it to be guaranteed for? And the thing to remember here is clients usually don't understand the insurance policies that they've bought. Mm-hmm. And oftentimes the people selling them haven't understood the policies that they've sold. So your clients are coming to you and they probably have a misconception about their life insurance. Then the next thing, this is the biggest issue with any type of cash value permanent life insurance, whether it's whole life, universal life, indexed universal life, variable life. I'm probably leaving a couple off there, but basically anything with a cash value is that it's subject to performance. Mm-hmm. And the only way to tell how that policy is going to perform in the future is to order what's called an in-force illustration, which is an illustration of hypothetical values in the future, but using today's values rather than the values at the time the policy was issued. And what that means is that when a policy is issued, there's certain assumptions like interest rates or dividends, as well as the cost of insurance. So an in-force illustration is a way to gauge how the policy is actually going to perform based on how it's performed to date. So it's really checking up on the policy.
Yeah. And so for advisors who are looking to get deeper into this, what other pieces should they be looking for when they're doing these reviews of policies, that you've noticed can get overlooked? Just a slight interruption in this conversation. I wanted to bring to your attention two things that are important for you to know. So we're always at the mercy of social media algorithms. So if you can subscribe to the show, that would mean a lot to me. Even more to me if you can leave a rating and let me know what you think about it. But we have a new newsletter that's coming out. It's going to be very active in 2025. That is specifically around tax issues that I'm seeing advisors face in their own practices, changes in legislations, and the pieces that I think are critically important for you to stay ahead of as an advisor with the new administration. So nearby, wherever you're interacting with this, will be the link of how to sign up for our newsletter. Also nearby will be the link to my LinkedIn, which is the best way to get in touch with me, learn more about what we're doing for advisors in the tax strategy and compliance work that we do, and also to get access to the various tools and interviews and things that I do, specifically designed to help you improve your practice, improve your own tax situation, etc. So let's get back to the episode, and thanks for tuning in.
Well, so let's go deeper with the in-force illustration, because that's where it really gets, I would say interesting. Mm-hmm. That might not be the right word, but where you can start to spot challenges is you'll find that the current premium is not sufficient to carry the policy to maturity. And maturity is the maximum age at which a policy will stay in force till. Is, the client will say, well, I bought this policy. The agent said it's going to stay in force to age 100. And you run the in-force illustration, and with the current premium, the policy is going to lapse at the client's 85. Well, that may not match their plan, or the client's needs may have changed, and the advisor will say, well, okay, you having coverage to age 85, that's going to make your financial plan go. You're good to go. But if it's not, then the client will need to increase the premium to keep it in force to age 100. Mm-hmm. The other thing that they'll find is like a policy loan. The client will have taken out a policy loan, and that can really erode the performance of the policy, especially if the client is borrowing loan interest. I've seen that many times. Clients will have an old, cash-rich whole life insurance policy. They've borrowed money from it. then then they continue to borrow the loan interest, thinking, oh, well, it's okay, it's still going. But what they don't realize is that that's going to have a negative long-term impact on the performance of the policy. And that's where the financial advisor can come in, and really provide a service to their client, just like they do with the rest of their portfolio, by tuning it up and making sure that things are performing as expected.
Yeah, no, that's important, because it sounds like with a lot of these policies, this isn't an area that I dabble in at all, but it sounds like with a lot of these policies, they kind of almost get like an orphan child treatment of, who knows when or who a client may have bought these from. And yet for you to come in and actually take a look under the hood and see what's going on and make sure that things are actually working, that's not something where the insurance companies are coming back and saying, hey, client, this is not, we're not going to make it to term on this one. Like, is that basically the process that you've seen, is just that they kind of just get handed off to the client, and unless somebody else outside of the company is actively managing it, it just can kind of, like an abandoned lot, kind of just go to seed?
You are 100% on target. In fact, the insurance companies call them orphan policies.
Oh, really? Oh, that's funny.
So you nailed it. And it's a huge problem for the industry. One, the insurance companies do not generally proactively send out enforced illustrations or even hint to the clients that the premiums are not going to be sufficient to carry the policies to maturity. So if you're looking for the insurance companies to help out, they're pretty much not going to help out. Then you keep in mind the churn in the industry of insurance agents. The average insurance agent, lasts 4 or 5 years. So there's a tremendous turnover. So, if your client purchased a policy, there's a pretty good chance, maybe a 50% chance, that their agent's not even in the business anymore.
Yeah.
And then you have a higher chance that the agent sold in their first few years in the business, where maybe they were getting their feet wet. They may not have a contract with that company. So, it's a huge problem that not many people are talking about. I've been talking about it for years, but I'm one of the few people who keeps talking about it.
Yeah, because that's a huge problem. That's a huge problem. Because I've encountered similar things on the legislative side, just in tax world, when you have certain things where nobody owns it, in terms of making sure that a process is being followed or a filing is happening. And when it doesn't fall into a particular profession to like own it, we're seeing this with like the BOI reporting requirements that are coming up. Nobody quite owns it. And so I think a lot of people are going to miss that filing obligation. And it sounds like with a lot of these life insurance policies, it's a similar issue where they kind of go into a no man's land of nobody owning it. So for advisors who are interested in, getting the requisite self-education to be able to do this work and be able to be that advocate for the clients, what are the best resources that you can recommend, or places for them to start if they want to deepen their knowledge on how the different products work, especially if they don't come from a background of having sold insurance products before? What's a good place for them to start, or expand their knowledge in this area?
Well, I am biased. So I would say, my book, Questions and Answers on Life Insurance, is a great place to start. It's a comprehensive look at life insurance with everything you need to know to order, enforce illustrations, review policies. It's used, some of you may have seen it in your financial planning courses. It's used in different financial planning courses. A lot of financial planners use it as part of their practice. There's a companion workbook. You can just email me and I'll send you some sample enforced illustration letters. So I'm sure Catherine will have my contact information. You can reach out to me on LinkedIn. I'm glad to share any of my materials for free. But other than that, I've written a lot of articles. There's not a lot written on this, and there's not a lot of resources.
Yeah.
So I wish I could say, go here and you'll find this huge treasure trove, but there's really not a lot. So, I'm available and glad to share with any advisors the materials I've created.
Yeah, that's great. Thank you, Tony, for that, because I've experienced, the same thing with certain nuanced issues in my field where it's, people will ask me questions like, well, how do I know like when I'm supposed to be an S corporation? And it's like, you ask 5 CPAs, you get 4.5 different opinions. There's not a lot of good places to get resources on certain topics. And in my experience on the life insurance side of what I've tried to do for self-education, I've experienced the same thing, that there's not a lot of unbiased information out there that seems to be coming from a place of just education and not just product pushing. But so for advisors who, are maybe in the skeptical camp still, need to learn some more about this, are there ways on, a mindset level that you think are common misconceptions that are things that you encounter from other advisors, maybe when it comes to these policies, just kind of on a higher level than some of the technical things that, go into one policy versus another that they should be thinking of?
Yeah, as we started out, is to back up and not get dragged down into like term versus whole life or whole life versus universal life. Is, just like you do with other areas of planning, is to go back to the planning first.
Mm-hmm.
And then think about if the policy is going to meet the client's goals, values, priorities, and everything else, and where it fits in the flow. Don't get dragged down in the whole psychological aspect of life insurance. Life insurance is just another tool in a financial planner's, toolbox. It's nothing special, but, it's got a lot of emotion to it. And you may have your own personal emotion as an advisor because of your own experience. Unfortunately, the life insurance industry is represented by some people who don't represent it well, if that's a good way to phrase it. And I think a lot of financial planners go, you know what, I really don't like dealing with life insurance people. But that's not a good reason to not review your client's life insurance policies because you don't like the life insurance industry.
Yeah. No, well, you got to be the change that you want to see in the world. So,
Exactly.
if you want it to be done, investing the time into it. But any, final thoughts or things maybe that we didn't hit on that you think are important for advisors to hear before we sign off, Tony?
Yeah, don't be intimidated. As I talk through some of these things, it sounds like it can get complex, but as an advisor, you can order an in-force illustration. You can review it. You can talk to your client, and you can really be a good resource for your clients by helping them understand their life insurance, because life insurance is a huge component of their financial plan.
Yeah, absolutely. Well, I want to thank you again, Tony, for coming on. We'll put links to how to get in touch with Tony and his website, and a link to the book. And I just want to thank you again for coming on and sharing your expertise with the audience related to this, because this is something where there's a lot of toss up about it. So
that's putting it mildly.
Yeah, so I'm glad things didn't get heated. I don't know enough to get heated about it, but so I want to thank you again for coming on, and for the advisors listening, you can send me an angry DM if you like, if you didn't if you didn't agree with what we were talking about, but I'm always interested in hearing feedback from those who listen to the show. So do feel welcome to send me a message. I'm always interested to hear what you learned, what you took away, and how we can make the show better over time. But thanks again, Tony, for coming on. And for those of you listening, this was another episode of the Financial Advisors Want to Know podcast.